Hey, good morning. Welcome back. I know it's been a while. Typically, this was my weekend to work. Got called in. It was a holiday yesterday. I was like, you know what? Market ain't gonna be open. Do some overtime. Floor's been busy. Lots of patience. It's like overtime. Talking a little bit about all right, where we're putting our money. You can see where the account is at. Just cracked. We've cracked the $1,000 finally on earned dividends for the month. So far, we've made 317. Like I've said, my goal at the very least for the end of this month was to, on average, be about $300 in dividends and right about there. My goal for the actual month previously was to hit 60K. So we're basically going to have to adjust that and let's see if we could shoot for 70,000 allocated into the market. Obviously going to have to play it smart with where many stocks are. We're seeing TLT, which of course taking a bit of a gap down, right? So markets may trade higher. A lot of stuff is overvalued, so we got to pick accordingly. Typically, where I've been placing my money is typically in assets. We've seen like commodities, I should say. Commodities have been going up. Like for example, which is why I originally talked about getting an ExxonMobil because of the price of oil. As you can see, when we first started trading it, Exxon was like, light crude was like 40, 39, 38, 41. It was trading in that little, kind of in that little bit of a channel. And we've seen now, of course, that crude oil has made some nice moves. They've projected crude could go anywhere. And so that's where we see crude was hanging out down here like 39, 38, 36, 40, etc. And of course, crude hits 60. It's projected to hit 80, which of course means ExxonMobil is going to keep going up. ExxonMobil pays a nice dividend. So not only are we getting appreciation on the stock price, but then we're also getting some nice dividends coming out of ExxonMobil. And of course, if you had paid attention, the CEO of Exxon said we've got plenty of money to pay out that dividend for the next couple of years. And so while you might see people losing their jobs, it doesn't necessarily mean that just because a company is laying off workers that the company is doing poorly, right? It's just like at home, like you live, wherever you've got a budget at home. And or same thing with dividend cuts. Some people don't like it when companies cut their dividend, but I look at it as, I look at it as more as fiscal responsibility, right? So maybe you were going out every week or twice a week, you were taking the missus out, whether it's your wife or your girlfriend out to eat because you had the money, right? You had enough money that you didn't have to worry about the budget because you could get everything else paid. But of course, during hard economic times, you've got to pull the budget back and start basically cutting out the fat. So companies do the same thing. So from an investing standpoint, it doesn't necessarily mean that the company, in terms of the stock, will do well, or in terms of the money that the company will make it will affect necessarily the price. Same thing with the dividend. If the dividend needs to get cut, it needs to get cut. If jobs needs to get cut, the jobs need to get cut to save the business. I would look at a business that doesn't want to do that during hard economic times as something that is being mismanaged. The business is being managed poorly because you don't just not pay attention to the budget, right? If you can't pay the dividend, you can't pay the dividend. You've always got to make adjustments, and that's just how that works. So that's why we're seeing ExxonMobil go up, obviously because of some of the policies being put in place by Joe Biden is obviously affecting the weather, is obviously affecting. I keep hearing, it's funny because I was talking about ExxonMobil with a lot of the nurses that I work with. Most of the guys that I work with are all investors, right? Most of the male nurses that I talk to are all investors to some extent. And of course, me being more into investing has gotten them more into investing. So we talk about this stuff all the time, especially with like other doctors that will talk about therapeutics that they've heard from certain companies. So we kind of get little tidbits here and there from each other about where everybody is putting their money so that kind of everybody does well. But overall, they were quite surprised that I talk about it. And I was like, oh yeah, ExxonMobil is going up and the price of oil. And they're like, yeah, the price of oil is going up. They're like, I'm paying so much for gas. And I was like, that's why I told you to buy XOM. And then it's just like, I got you now. Right. So it's the same thing with Wells Fargo. Wells Fargo, we're also seeing banks move up. Wells Fargo is at an area of where it broke through the resistance. The resistance was $34. As you can see, it multi-touched 1, 2, 3 times. Again, right here with a subsequent pullback, bounced off of $30, which it should have, because that was your resistance right here. And of course, you had a little bit of a channel right here. So naturally, the stock was going to test these areas of supports and resistances, which is why it's important to understand support and resistance, right? I don't really pay attention to this thing made this pattern and it made a triple top and it made, this is an M bottom or a W, whatever it is. Just know your support, know your resistance. That's the least, at least for me, typically what I pay attention to if you're looking on typically on a longer term perspective, right? And so Wells Fargo for me, right? This is how I played it. Looking back at the chart, you can easily look this up on Seeking Alpha. During the early 90s, it crashed, right? I should say during the late 90s, it crashed with much of the economy. So did the dividend, as it naturally should, right? If banks aren't making enough money, they ain't got enough money to give out, right? So naturally, the stock price is going to come down. And then once it recovered, the banks started making money hand over fist, which you should understand that they will. This is just the system that we live in, right? So you got to play the system and understand the system. And so when you see the banks, of course, now are ramping up, etc., eventually what will happen is, of course, the dividend will come back. The same thing happened in the 90s. The same thing happened during the financial crash of 2008, where it was paying, similarly, it was paying, I think, 8 cents or something like that. And then eventually it ramped all the way up back to, I think it was 270 or 250 or something like that. And so eventually we'll get there. The stock price recovered. And if you look back at the chart, right? Look back at the chart. In the financial crash of 2008, we came all the way down to like $8, and it was paying 5 cents, right? But then once, of course, the stock recovered, it was paying 30 cents, right? And then it just kept on moving higher, 30 cents, till where it got to 38 cents, right at the peak. And I think it was paying, I think they were paying out, what was it? Right, 51 cents, right? So that's why I got into Wells Fargo. That was why. Just looking back at history often repeats itself, and so if you pay attention to what happened in the past, you start to see some of the same patterns that now are indicating, basically here in the future, just like governments, right? Governments and the way, you just look at history, right? We went through different periods of how the political elites basically ran things. For a while, there was democracy and freedom, and then it kind of swings in a different area to more communistic, socialism, feudalism, sort of, and you have to be able to walk accordingly or live outside of those systems. With that said, just talking about what I'm going to be watching for today, Fuel Cell is on a bit of a pullback. We're seeing a bit of a pullback in Fuel Cell. It came back about 20%, right? So from where it was about $29. We've pulled back roughly about 20%. 23 is basically our support. It's basically our support. You should see it touched at multiple days right here where it originally extended, multiple days of overextension, trying to hold past 30s, but it couldn't. And then again here, we saw a little bit less of a decline. And then we finally see it start to rally and then a retouch, right? Because more than likely there will be some point where the stock will retrace back to its original, what was its original resistance. And then of course it will test it to see if it is an area of support. If buyers, that's all that means is just history, right? You're looking back at the history from the past couple of days or from the past couple of weeks, from the past couple of months, or from the past couple of years, right? History tends to repeat itself. And so when this is typically what I look for, there's all different stochastics and MACD and whatever, right? There's a lot of other stuff that you can utilize, but I try to keep it as simple as possible. If you want to learn other things, other these different indicators, that's up to you. Typically, the only thing I use is a moving average, maybe some Bollinger Bands. The most important thing to me is volume, right? Are we seeing more people buying? Are we seeing more people selling? Are the buyers drying up, letting me know that I need to be careful because like stuff like this, right? The buyers are starting to dry up. You might get the floor pulled out from underneath you. You have to be careful with that, which is also important to understand. Some other stocks, let's say for example, SNDL, a lot of people are calling out a lot of these wheat stocks. It's important to pay attention to what your chart looks like, right? It's important to pay attention to what your chart looks like and to also pay attention to the volume. As you can see for this particular stock, looking back when it was a penny stock, naturally it traded very high in volume because people are just, the stock is so cheap that you can buy, you're not going in there and buying 125 shares, right? You're not buying 500 shares. Most of the people who are playing with these penny stocks are typically playing with like 50,000, 100,000, etc., right? But even then, as you can see that the volume, you can look at the volume is right here, right? This is the daily volume, right? So for the most part, the volume was around 5, 10, 15, maybe even 20 million, right? And then of course it starts to come across the wire, YouTubers start talking about it, and then you start seeing the volume jump 470 million, right? 480 million, 180 million, a billion, right? And then what happens? Right? Boom, the floor gets pulled out from underneath you. And you see a stock that was a penny stock that goes all the way up to $4 and then shoots all the way right back down. And of course, even individuals like me, depending upon how early you hear about these plays, you can get swept up in it because all you are doing is you are necessarily providing the liquidity for the people who were in here pumping it, and you hear about it in the chat rooms, you hear about it on the internet, maybe you hear about it via social media, whether it's YouTube or Twitter, etc., right, on these different sort of platforms. And so you might just think, well, I'm only buying 100 shares, 125 shares, I'm buying 50 shares, etc. But there are a lot of other people that will hear about it as a penny stock, and maybe they've got a little bit of liquidity, they will buy 5,000, 10,000, etc. And so they provide the liquidity for the people who are getting in here basically to pump, right? They pump it and then they dump it, right? And so these are typically plays that I personally would recommend, that especially if you are new, not to become involved with. Because sure, maybe you heard it a little bit early, you got in at 120, you got out at $3, and you're like, amazing, best play ever. But for the most part, most people will lose money in this is because the scenario is set just like, right? Scenario is set for you to lose money. It's not set for you as the peasants, the peons, right, to make money, right? And so actually, this was all blamed on Robinhood. There's not enough liquidity in retail traders to do this. It's just not. And then after all this was said and done, they subsequently then realized, that there were actually all these different hedge funds that were involved, right? So you had hedge funds that were involved that had already been buying it early. And then you hear a little bit of a chatter on the Reddit, you hear a little bit of chatter on social media, and then it gets little mainstream media, etc. There's a little bit of hype behind it. And then people around the water cooler, people at your job are like, hey, did you hear about GameStop? Do you think it's a good idea? Same thing, for example, like other assets, right? Other things that are deemed as assets very similarly can play out the very same way, where they get pumped by people or certain individuals, right? The people who got in very early, and then it gets pumped, and then you know how the story goes, right? It's funny when I watch stuff like this, if you do like a Google search, most of the Bitcoin that is sold comes from China. I'm just saying. In China, where the Chinese started getting involved with this, they put the kibosh. They put the kibosh on that, right? And then and then China seized, I think it was like 300,000 Bitcoin. And then if you do any research, you'll see that overwhelmingly like 60, 65, 70% of all Bitcoin comes from China. I'm just saying, be careful with your money. Be careful what sort of scenarios you find yourself getting involved with. Like, for example, other plays that just come out of nowhere, right? They just come out of nowhere, they get pumped, and then right, they get pumped, and then same scenario plays out over and over and over and over again. And typically, you look back, and it's the same scenario, right? You look back, and you see it's the same scenario. Liquidity is 50,000 shares traded, 100,000 shares traded, and then it goes into the millions. Once it gets really, really cheap, the stock was 5 cents, right? The stock was 5 cents back in November of 20. It was trading 15 million shares, and then you look at it here, and it's trading 200 million shares, 400 million shares, 400 million shares, 350 million shares, and then eventually the liquidity dries up, and what starts to happen, right? That's typically why I stay with more plays that, at the very least, there's value behind the company, right? You can see the company is making money, and that's why typically in those other scenarios, they're not telling you about earnings. You can't talk earnings per shares. You can't talk new business models. You can't talk contracts. And that's typically what you hear in those scenarios. They don't tell you about, oh, this is this ticker, it's making this particular pattern. Here's the volume coming in, and watch for a breakout on volume, etc. Because you can typically do that with companies that do well. You know Alibaba, they've been making money hand over fist. Salesforce is another company, right? We talked about Salesforce back here when I saw it just at 225. I unfortunately didn't see it at 210. I wish I did. I would have bought it. But as you can see, the company is coming back, and it's coming back with some nice volume. We see another decent volume day of 10 million shares traded. Stocks reaching for highs. Salesforce, for those who don't know, has basically stated a work from anywhere policy, and that's basically up in the air going forward, right? So Salesforce is one of the biggest controllers of space, right? So they own a lot of office space. So if you're a big entity like Salesforce, and now you're realizing we don't really need all this office space, I can just have my employees work from home or work from anywhere, right? They can be in another country for that matter. And of course, that means less spending the company. Now I don't need that rent. Maybe all that office space that I have, I don't need it anymore. So now the company saves money that they can use to put towards development, to put towards growing the company, or maybe they decide to put out a dividend because they just feel like, for whatever, right? Sometimes the company's too big, they can't grow as fast as they would like to. A lot of that cash just sits and does nothing, so they'll just decide to pay a dividend, like Apple, right? That's why Apple does it, because they've got so much cash. The company can only grow so much, so they're like, let's just give out some of that money a dividend, and it lowers the amount of tax that we have to pay, etc. Right? So the last thing that we're going to talk about is JetBlue. JetBlue, I always liked JetBlue because it didn't really have as much debt. It's based here in New York. I'm paying no attention to this. It's just play money. And so, like I had said last time in talking about supports and resistances, that there had to be some sort of a catalyst that was going to push for airliners to move higher. I'm not sure if AAL moved up. Yeah, I guess AAL did. But this was more like Robinhood sort of stuff. But going back into JetBlue, like I said before, that you would need a decent amount of day, and now we're starting to see some volume come in. And again, same thing talking about supports and resistances, where eventually the stock would break out and then retest. And we've seen one retest here and another retest right here. And so once I saw the breakout and I saw the retest, I bought it again. So whatever I sold about a third of my position at 15, I think it was 15.96. I ended up rebuying back in again because I had been playing it. I had been playing it for the channel. Now we are breaking out of the channel. And so more than likely I'll end up getting out of JetBlue. If it comes into the 20s, I'll be happy to sell it. I'm already in it from a little far down. So if I can catch, what it would come back into 21s, 31% plus what I'm already in, I'm already fine with. So these are some of the points. Again, like we talked about fuel cell, we talked about JetBlue, we talked about fuel cell JetBlue, we talked about BABA, we talked about Salesforce, etc. So just going to be real careful. One, where you put your money. Two, always pay attention to support and resistances. A lot of times it just takes time for stocks to come back to the prices that you like, right? You might go to the supermarket, you might want to buy some coffee, but coffee is overpriced. You know what? I'll take tea today. Or you know what? I won't drink anything. I'll go have some juice or whatever it is, just to make do until what I want comes to the price that I like it, right? It's the same thing with a relationship. You might meet a woman who has all the standards, all what you're looking for in terms of mindset, curves, but when she starts speaking and talking about what her price is in terms of what she requires, you might be like, you know what, you're a little too overpriced for me. You'll go back out into the dating market to find what you're looking for. And so it's an important, when it comes to investing, whatever it is that you're investing, whether it's your money, your time, or your energy, right? One of the most important things is to value your patience.